Hello, everybody. This is Tom Hutchins with Angel Oak Mortgage Solutions. We got a couple more minutes until the top of the hour. So just want to welcome you, and I'll be back shortly to get this kicked off. Hello again, everybody. Tom Hutchins here with Angel Oak Mortgage Solutions. It's about a minute after 1 o'clock Eastern time. Hope everybody's having a great day and a great start of the month. I think we'll just go ahead and get started now. It looks like there's quite a few people still calling in, but I think we're ready to roll. So just so everybody is aware, we are going to have a question and answer time. So just ask those questions, and we've set aside a good amount of time to get to those. But first, I just wanted to start with kind of the outline. We're going to start just with a non-QM, really kind of an update of what's going on in the non-QM space. Then I'm going to talk about Angel Oak and what's happening here at Angel Oak. Then really going to just get into some products, the non-QM products. I would imagine there's probably going to be quite a few questions around that. Then I'm just going to show you our website and some marketing tools to help you, and then we're going to wrap it up with that question and answer. Stephen Winokur, our Chief Marketing Officer, he is also on here, and he's reviewing the questions. So to those, but really going to just hold those all to the end. So anyway, again, my name is Tom Hutchins with Angel Oak Mortgage Solutions. I've been with Angel Oak for a little over 6 years now. So I was one of the early ones in to help kind of bring back the non-agency space that Angel Oak has occupied since 2013. Non-QM itself came into being in January of 2014, and most of you know that, but I just thought I'd give you a quick history. Angel Oak, we started in 2013, as I mentioned. We saw the need. We even knew from the crisis that there was still a need for those borrowers that don't fit the agency and government guidelines. So that's really why Angel Oak is here, is to just take care of the borrowers that don't follow those guidelines. So that's really who we are. Had a lot of success. We've grown the business tremendously. In 2019, we closed just under $3.5 billion of non-QM only. So we were the largest non-QM lender in the space, still are. Projections for the entire market 2019 was just a little over 25 billion in originations, and 2020 was, the predictions were non-QM was going to exceed 50 billion. So growth was there. I would assume a lot of you on the call have actually been doing business with us, hopefully for a number of years. And we were chugging along to start 2020, and then the virus hit. And so I thought it was just important to spend a little bit of time to just talk to everybody about what happened in March. And really this came upon us, just like everybody else, so quickly. Angel Oak, we were making plans based on CDC and things like that for people to work remote. So we were building our new environment of working remote, and that was going extremely well. However, the thing to understand that's really important between non-QM and the agency and government loans, FHA, Fannie Mae, VA, Freddie loans, the thing to understand is that all of those loans have a government guarantee. So in March, early part of March, individual states started shutting down businesses. And as soon as they started shutting down businesses without a government guarantee, we represent private capital. So in order to represent private capital, we have to be able to identify credit risk, because we are actually taking that credit risk ourselves without that government backstop. So when government started shutting down state by state, it really became impossible for us to determine credit risk. And really the most important piece of that credit risk was what you've probably heard us talk about over the years, is ATR, ability to repay. And if we can't identify and determine someone's ability to repay our loan, again, back to not having that government backstop, then we couldn't originate loans. And it wasn't we, Angel Oak only, it happened to all non-agency lenders, not only non-QM, but you saw it in prime jumbo, and really all those markets got really shut down overnight, and really it was absolutely overnight as soon as states started shutting down. So what happened? We put things on pause, and then we continued to evaluate what was going on. And the last week of April, we were able to bring back some non-QM products, and I'm going to spend some time talking to you about that. So anyway, I really thought it was important that everybody understand March at this point seems like a long time ago, even though it's only been a few months, but that's what happened. We're looking at it as just kind of a new opportunity to reintroduce the non-QM. It feels a lot like it did to us back in 2013 and 2014 when we were reintroducing, re-educating, or at that time, educating everybody of what non-QM looks like. The good news, though, is a lot of people were originating non-QM pre-pandemic. So before the virus, non-QM was growing fast. A lot of people were using it to open new doors, and we're going to talk a lot about that. So with that, I'm going to go ahead and get the presentation started. I am going to just turn this camera off so I can click and participate on the PowerPoint itself. So I've already mentioned a little bit of this, but first, just kind of who is Angel Oak? And I think that's really important. Probably what makes us different and very unique in this marketplace is we're affiliated with an asset manager. So all of our loans are going to that affiliated Angel Oak firm. The difference there is that we underwrite loans and we originate loans to retain them. There's lots of rules around non-QM and securitizations. So even Angel Oak Capital, who's issuing these securitizations, they have to retain these actual strips within the securities. So the performance of the loan is important to Angel Oak Mortgage Solutions, Angel Oak Capital, and all the private capital that's participating in the space, as I mentioned already. Securitizations, I think it's really important to know. Angel Oak has securitized almost $6 billion in mortgage solutions production. And in fact, just 2 weeks ago, they issued Capital issued another securitization, and these were pre-virus loans, if you will. And so that was an exciting thing to see, that even knowing that what the economy has been going through for the last 60 to 90 days, investors still want to partner in non-QM production. And a lot of that truly goes back to the quality of the loans that we were doing pre-pandemic. So we were always originating good loans. Investors believed in it. We had great success with our securitizations, and we're going to continue that model in 2020 and beyond. I think I mentioned already, we were the largest originator and are the largest originator of non-QM, almost $3.5 billion in 2019, and we expect to be back to those levels very soon. Market leader, kind of talking about that from a volume perspective, but I think it's important to know that we were the first real company to come out and just focus on non-agency and non-QM specifically only. That's our business. That's what we've been doing since 2013, and it really has made a difference in our growth, our success, and at the end of the day, like I mentioned, the quality of our originations are certainly impacted by that specialization. Another big difference that hopefully you've experienced by doing business with Angel Oak is that customer service comes first. And I know that's probably a lot of you been in the mortgage business for a long time, and we hear that all the time, customer service, but we actually we define what that means. And the first one and most important is we provide and encourage access to our underwriters. So when we go through this, and this 1 and 2 kind of are combined, we take a common sense approach to making underwriting decisions. So we provide access to the underwriters. We're using common sense to make decisions. Non-QM loans, you've probably heard people say they're a storied loan in a lot of cases. And so this common sense approach really makes a big difference, so that we can understand that borrower, and it gets back to that borrower's the credit decisioning and that borrower's ability to repay the mortgage. Helping originators differentiate themselves. I'm going to talk about that a little bit more, but a lot of originators have had a lot of success by offering non-QM because they're different. They're different than every single originator has agency and government loans. There's nobody not offering that. So by having non-QM and becoming kind of a non-QM expert on the origination side is a way that originators can make themselves different in the marketplace, and they've done that with Angel Oak. We have a website, going to spend some time on that, as I mentioned earlier. It's really simple to navigate, some great tools to help you, both from a loan process standpoint and from a marketing standpoint. And then lastly is our account executive expertise. We have over 50 account executives even today that are all across the country, and again, they're absolute experts in this non-QM space. Most of them have been with us for more than 3 years. A lot of them 4 and 5 and 6 years. So you can have a lot of confidence in the expertise that our account executives bring to the transaction and to your relationship. So here, more benefits. Just so everyone is clear, we are a wholesale and correspondent lender. I have correspondent lender on here because we get asked that a lot. And anyone who wants to originate non-QM loans but would like to do it on their own warehouse line, that's a channel that we've been participating in for over 3 years, and we're happy to do that. Wholesale is our bigger channel. That's where most people like to originate. They want to broker those loans, and so wholesale or correspondent. Again, already talked about account executive expertise, very customer centric. We really put our relationship with you, because what we understand as an originator, getting a non-QM loan closed or not closed is such a big part of your relationship with your referral partners. So we absolutely understand that piece. And so we focus on you, the originator. Again, non-agency specialist, kind of talked about that. Years of experience. Yes, I've already talked about that as well. So I've been giving you the benefits. And easy to work with. This is really something that we hear from you and hear from originators on a very regular basis. Oftentimes, when a loan is done and closed, we get unsolicited feedback from originators like yourself saying, "Gosh, that was a great experience. You helped put somebody in a home that didn't think that they could qualify for a loan in today's environment." And so it's really exciting to see the kind of comments that we get from our customers. And then resources. We really believe that for you to scale your business, we have to provide you tools that will make your business more efficient. And that's really what we've always been focused on. And I'm going to show you some of those as we move forward through this. So let's talk about products. I don't really like to just kind of show up and just give you all the product details. Not going to put a matrix on here, but I do think it's important to understand the types of programs and products that are currently available. As I mentioned, we rolled these out the last week of April, and a very important part of non-QM lending from the beginning has been the bank statement loan. This is a loan for that self-employed borrower whose tax returns simply do not support their cash flow and really don't tell the true picture of their ability to repay. So we rolled out bank statements. I think a lot of people were actually a little bit surprised given the, the economic environment that we would roll out bank statements. But again, we've got a 6-7 year track record on originating these loans. We know the quality of the loans has been outstanding. So we came out first with our bank statement loan. You can see we can offer up to an 80%, 65% down to a 680 score. Very large loans. We need a little bit of seasoning over 4 years from foreclosure, BK, something like that. We are analyzing 24 months bank statements, but I will tell you what's really important is, think about what's happened over the last 90 days. When we're analyzing a borrower's bank statements, it's very important today that we have to look at their business and what has happened during these shutdowns. And we understand some were shut down due to government regulations and government requirements. And hopefully those states that they're in have opened back up, and we'll be able to see that. That's kind of the beauty of bank statements. It's a snapshot of someone's business, not only 24 months ago, but exactly where it is today. So again, you have to be self-employed to do bank statements. You have to own at least 50% of the business. We don't ask for tax returns or 4506s. And then just the product piece, we have purchase, rate and term, and cash outs available. So again, bank statements, big product, big program. I think it's really important to understand our process around bank statements. We have a team, we call it our bank statement review team. They are dedicated, and all they do is calculate income for you. So all you have to do is provide the bank statements, and I'm going to show you how. Provide the bank statements to your account executive, and we'll get those bank statements to the review team, who's going to come back with a deposit and an income calculation, really kind of step one. So again, I'm going to walk you through that process, but it's really important. What we found is it helps you as an originator not waste time on loans that really have no hope of closing. When we first were offering bank statement loans, and a lot of lenders even up until a few months ago were making bank statement calculations during the underwriting process. But by doing that, you have to put a lot of effort into getting a loan even to the underwriting step. So we do that upfront. We've moved that out of everything else and just calculate that income, and then we use that income all the way through. So you can be very confident that that borrower's income that we have calculated is going to, and that if that borrower qualifies, then you've got yourself a loan. That's when you can start working on it and getting everything into us to be underwritten. So that's our bank statement loan. Again, if you have any questions, please submit those and we'll be getting to them. This is our jumbo full doc product. We call it Platinum. Threw the word jumbo on there just so everybody knows it does have to be over a 510 loan amount. But we're doing 80% up to $1.5 million loan amount, and then we'll do 70% up to $3 million. So again, similar bank statements will go down to a 680 credit score. We do require 1 additional year of seasoning out of foreclosure and bankruptcies, so it's 5 years. We'll do owner-occupied, second home, non-owner, and we allow up to $500,000 cash out. So really a strong product, again, purchase, rate, term, and cash outs. Okay, and then our last product is, we call it our investor cash flow loan. It's known in the market as the DSCR, the debt service coverage ratio. We're doing 70% purchase rate and term and 60% cash out. Credit scores all the way down to 700, 4-year seasoning. We're not looking at employment. What makes this loan special, it's really created for that professional investor. But we're looking at what is the rent, the estimated rent that the subject property, that rental property, what is that going to derive for the borrower? And as long as it covers the PITI and with a little bit of extra, I think it's 1.1% coverage. As long as that is covered, then we're good. We're going to be able to do that loan for the borrower. So we're not looking at their employment. We're not looking at the borrower's income. We're looking at the subject property which is a great loan for the professional investor. We don't have any limits on properties. So that investor that owns 20 loans trying to go get another investor loan through full doc or some other income possibility, it can be really challenging. And that's where the investor cash flow loan really comes into play. Another common question is, can the loan be titled in an LLC? And the answer to that is yes. So that's our investor cash flow loan. Again, it was a really big, has always been a big part of the non-QM space. So really just want to make sure everybody is comfortable with that, understands that. It's a very easy loan to originate, because think about it, you don't require employment income type documentations. We're looking at the borrower's credit, the property itself and the cash flow, and then the borrower's reserves and cash. So those are the three big programs that we have. Again, please feel free to submit any questions that you have about it, and we'll answer those shortly. Okay, so now I'm going to change gears a little bit. What I'd like to do is just show you our website. The website is extremely important, and I mentioned earlier, we just try to make originating loans with Angel Oak easy. So if you come away with anything from this, please just remember our website. It's angeloakms.com, angeloakms.com. And this is where you can find all the tools. We have some quick links here. Really right here are the two big ones. And I'll mention our agency Quick Pricer. We do actually offer Freddie Mac loans today. So if you've got, need some help with agency loans, I would highly recommend you just check out our agency Quick Pricer. You'll also find our pricing in Loan Sifter, but we're priced extremely aggressively. And if we can help you close your agency loans and close them fast, we're here to do that as well. But I didn't want to show you that today. I really just wanted to keep the focus on non-QM. And so right here, you'll see non-QM Quick Quote. That is where you would start. And you click on that. It's extremely simple. So if you look here, you only have to answer this number of questions. So loan amount, this is actually a bar right here that you can slide up and down. So you can put the loan amount, let's say 453,900. Enter the borrower's credit score. We'll say a 740. Loan to value, we'll just throw in 60%. No problems on the housing history. The property type, we'll call it a one unit. Purchase, full doc. Let's look at 24 months. So 24-month bank statement, 60%, and this gives you 60%. You can actually go all the way up to 80. So this is the maximum loan to value available. There's your rate. You'll notice there is not a rate in lender paid. As of today, as the market gets started and as we continue to grow this, there will be lender paid compensation available again, but as of today, all loans are borrower paid. So you have to charge your origination upfront to the borrower. So this gives you just kind of a high level what is available for your borrowers. And let's see, if I raise the loan amount, go to full doc, it'll give you the options there with platinum, and you can change whatever you want or need to change. It will kind of give you that quick answer. And what we recommend is, as opposed to like trying to find our matrix and understand our products and programs, just know this spot on our website. If you use what we call Quick Quote, just use Quick Quote, it's going to get you an answer. And then you know whether or not, when you're talking to a borrower, do we have a deal? And again, you can change it on the fly, change the loan to value, pricing, you can see adjust, still says you can go all the way up to an 85. So if that works, the only thing that you do is you click right here, submit Quick Qual, and you go there and it's going to take you down and you just start filling out some more information about the loan. Most importantly, you select your account executive from this drop-down box. You upload a little bit of information, 1008, 1003. Here you can upload the bank statements. Once you've done that, you just simply hit submit the pre-qual request, and that automatically goes to the account executives you selected, and they're going to get back to you with a full pre-qual determination that's going to give you all the terms. You can really kind of count on that. Again, back to our AE expertise. If they have any questions about the loan, they're going to reach out to you. They have lots of resources on their end. We have an AE help desk. So if there's any questions about a loan, they're going to get those questions answered before they give you something back in writing. So again, it's all about speed. That is one thing that we want to get those answers to you and get them to you quickly. But again, this quick quote at the very beginning is going to help you know, do I have a loan or do I not have a loan? Another thing that I would like to show you on our website is the Find an AE. If you are not sure who your AE is, just click on this and it'll pop up who's available in every state. So you can see, just hover over the state, all the states that we're doing business in currently, and you can find that AE. You can also put your information in here and just submit it, and we'll have someone, if you don't want to reach out to an AE, we will actually find the AE for you. So either way works, and we're happy to help. And again, please utilize the expertise of those account executives to get you to the closing table. All right, so another thing I want to show you on our website is, if you are approved with us, if your company is approved and you personally are approved, you will have an individual login. And when you do that, I'll show you where you click here to log in. And this is kind of a dummy account, but you would log in right here. But there's all your loans, we list our turn times. We have the support staff, our account managers, all right here, their contact information. But to me, one of the most useful parts of this, other than managing your pipeline, is our marketing portal. But if you go to our marketing portal, it drops down whiteboard or flyers. And I just wanted to show you an example. But we've seen people be very successful. And I mentioned earlier about differentiating yourself. This is how you differentiate yourself. Use these marketing tools. And I'll just, as an example, click on the bank statement loan, or excuse me, bank statement flyer, and you would basically just fill out this information, and it's going to appear on this flyer. So this would be your personalized flyer. And again, I could input it right here on the left. It'll show up on the flyer. Then you can save that flyer. You can post it on social media. You can email it out. You can print it. You can do really whatever you want with it. It has nothing about Angel Oak on it. It's simply going to have your information. You can upload your company logo, and it's really a great tool that a lot of originators have used to get the message out in the market that these loans are available, and they're available today. So really helpful tool. That's kind of it from a product standpoint. Stephen, I think we were talking about going to questions and answers. Do you want to maybe ask any questions, Stephen, and I'll do my best to try to answer them?
Yep, certainly. I'll try to do them by product category. So got a lot of questions on our bank statement program. So one is, does the bank statement review team review loans for pre-qual purposes on TBD properties?
Get that question a lot. It's a really good question. And the answer is yes. In fact, we think that's really important because that will help you know exactly what that borrower can qualify for. So instead of you having to calculate income and go through 24 months bank statements, send it to us. We'll review the credit. We'll look at the 1003. We'll come up with an income based on those bank statements, and then we'll get back to you with what is available for that borrower. Great question.
Another one on bank statements. Will the bank statement program work for someone that sold a business but is still getting income on that business?
They've sold the business. No, not likely. We have an asset qualifier loan that might work for, but no, they have to be an active owner of the business. They have to own over 50% of it at the time of originating the loan.
For the bank statement program, can you use personal bank statements?
Not today. Today it is business bank statement only. I will tell you, the primary reason for that is pre-COVID. The business bank statements made up about over 80% of the production. So for today, it's business, but I think it's important for everybody to know that as the economy continues to evolve, so will the products and programs. So in fact, the products that I showed you today have already had 3 significant changes since we rolled them out the last week of April. So, you know, the message that I'd like you to hear is that non-QM is coming back. You know, we predict it's going to be back, maybe not exactly like it was before COVID, but it's going to be extremely similar. There's lots of optimism from an investor standpoint, lots of optimism from just an economic standpoint. So we'll continue to make modifications to the products and programs, and I would absolutely foresee that personal bank statements would be an add-on down the road.
Great. This one I think is timely. How do you calculate the income when the business closed the last 90 days? So I think what they're asking is, I guess they were in a state with a shutdown and their business was closed for 90 days. How would we calculate the income? Yeah,
so you know, it kind of gets back to the whole common sense piece. We're going to make common sense decisions. We are going to absolutely have to see that business has reopened and that they have revenue again. So back to the whole not having a government guarantee, we're going to have to see the business back open with revenues coming back in. We're going to make common sense decisions though, based on the type of business, the industry that the business is in, and then what does that look like now going forward.
Regarding bank statements, what other income support documents do you request?
Income support documents, we're going to we have a bank statement questionnaire that gives us from the borrower or the borrower's CPA that just kind of gives us an overview of the business itself, kind of an idea of the expense factor that's related to that business. So it's kind of we don't require any other income documentation. The bank statements are what we use to qualify them, but we do require more business information to help us come up with that final income.
That leads into the next question. How do you calculate the expense ratio?
Well, similar to what I just said, we're looking at the industry that the business is in. We can have expense factors as high as 90% and expense factors as low as 30%, and somewhere anywhere in between. So we look at the business and we take the bank statements themselves, the business questionnaire, and then we come up with a calculation based on the information that we have.
Does the bank statement program require reserves?
Yes. Basically all of our loan products today require reserves. It depends on the loan to value that we're talking about. If it's 70% or less on bank statements, the reserves are 6 months. If it's a higher LTV, if it's over 75, it's going to require 12 months. So anywhere from 6 to 12 months, sometimes can be 9. It just depends on the makeup of the LTV and the FICO of the borrower.
Is a CPA letter still required for the bank statement program?
It's only required. We have to determine the ownership percentage. So like I mentioned earlier, they have to own at least 50%. So we would need some type of third-party verification. It doesn't have to be a CPA, it can be an accountant. We have to have some type of verification of their ownership percentage. We don't have to have the CPA to determine the expense factor.
Great. What if a business has multiple bank statements used for different purposes? So then I say payroll, operating account.
Yeah, we're really going to only be able to evaluate one business bank statement. So it would be challenging for us to only look at or to put them all together. that's going to be really tough. We're looking for the business who runs kind of everything through their business account.
Great. We have several questions on the investor cash flow program. What's
Okay.
the minimum loan amount on that program?
It is 125,000, and the maximum loan amount is $1 million.
Great. Is there a limit to the number of homes financed?
Through Angel Oak, there's a limit of 5, but there's no limit for the borrower. So the borrower can have as many as the borrower has. That's fine.
Are flips allowed?
Well, we really are not a short-term financing option. The investor cash flow does come with a prepayment penalty. So if someone needs a loan, kind of a bridge loan in order to flip the house, this is really not the right product for it. And a lot of that gets back to, that's not even specific to investor cash flow. For bank statements, for platinum, for really all the non-QM loans, they're meant for kind of long-term capital, and that securitization, that's a long-term capital vehicle. So borrowers that are just looking for short-term financing, non-QM is really not the right market for those borrowers.
We have a couple questions on different units. Can we do a 3-unit? Can we do a 1 to 4?
Yes, we can do a 1 to 4. So a 3-unit, yes. And you did say
Excellent.
investor cash flow, didn't you, Stephen?
Yes.
Yeah, okay, great.
What about the reserve requirements for the investor cash flow?
Oh, what they are, I'm sorry. Yeah, so we're gonna require 6 months if it's a purchase or rate and term, and 12 months if it's cash out.
Great. For the back to the business statement program, if a married couple is qualifying and both are owners of different businesses, I guess what they're asking is, can you use 2 different business bank statements?
Yes, we can.
For 2 different people.
Yes, if there's two owners of 2 separate companies buying a home together, you know, spouse or whatever, then yes, we can do that.
Great.
A lot of questions.
How does yeah, I'm trying to sift through them all. They're still flying in too.
That's great. Good.
Can you go talk about the seasoning for the bank statement program for foreclosure, short sale, bankruptcy, deed in lieu?
Yeah, sure. The seasoning. Okay, yeah, I couldn't remember if I had that on the slide or not. So for bank statements, it's 48 months, so 4 years seasoning.
All right. Do you have prepayment penalties on all programs?
Good question, and the answer is no. Only on non-owner. So if you're doing an investor cash flow or a bank statement investor program, anything that is a non-owner occupied investment property, those will have a prepayment penalty on them.
Great. Here's an operations question. Do we pull credit or do you? And if you do, what is the cost to the borrower or me, the broker?
So you as the broker would pull the credit and the initial credit, and that's what we're going to use to pre-qualify that loan, to, you know, for the account executive to look at it and give you that pre-approval. When the loan is submitted, we will pull a credit report, but we don't charge extra for it. And it's simply for just a QA credit report. We're using your credit report throughout the process.
Great. Can cash out be used for reserves?
No, it cannot, not today. We're looking for the borrower that has the reserves prior to the cash out.
Great. Somebody asked what the DSCR, the ratio is. I think you addressed that, but maybe you want to touch on that again.
Yeah, it's 1.1%. So as an example, I can't do the math currently in my head, but it has to be more. Let's say the estimated rent is $2,000 a month. It comes out to like Their PITI can be up to 1870 or whatever that exact number is. So there has to be a little bit more room than just the PITI. But it's 1.1.
Great. Can you bundle multiple properties under one loan? And this is for the jumbo platinum or investor cash flow.
No, we cannot. Yeah, no, can't do that.
Okay, cash out to use reserves. Sorry, that's just they're still flying in. So what is can you buy out or buy down the prepayment penalty? I guess they're assuming on investor cash flow.
Say that one more time again, Stephen. I'm sorry.
Can you buy out the prepayment penalty?
Yes, you can.
So there's a lot of different questions about interest only. Is it available, or when do you think it'll be back?
So interest only is available on our platinum loan, that full doc jumbo loan. It is not available on investor cash flow or bank statement at this time.
Are gift of funds allowed?
Yes, gift funds are allowed, but the borrower does have to have 5% of their own money into a transaction.
Okay. Do you have to be licensed in each state you do investor cash flow loans?
Yes, you do.
I guess the broker needs to be licensed. Yep.
Yes, they would need to be brokered. I mean, excuse me, be licensed to broker a loan.
This one we've gotten in a couple times. Is the 24 months business ownership a hard stop, or will less than 24 months be considered for offsetting circumstances?
I'd say we wouldn't rule anything out, but no, we're really going to need to see 24 months. The product itself requires 2 years of self-employment. So I don't know what extenuating circumstance would be justifiable to accept less than 24 months when they have to have been self-employed for that 24-month period.
Okay, so could you touch on the gift funds again? Someone asked did you say if gift funds are allowed on investor cash flow? And then someone else asked can the seller gift to you?
The seller cannot gift. Yeah, okay, so I'm glad somebody asked to clarify it. Okay, investor cash flow, gift funds are not allowed. Bank statement loan, 5% of their own funds plus reserves, that is allowed. Excuse me, that's the minimum that the borrower has to have. The remainder can be a gift on top of their 5% in reserves.
Okay, if an investor has completed a rehab and has leases in hand, what is the seasoning requirement to refi the bridge or hard money loan?
The seasoning requirement to refinance that loan, we have to have 12 months seasoning to use the appraised value. So we could refinance based on the original purchase price, but in this case, I'm guessing that they're going to have a much higher value than the purchase if they rehabbed it. So we would need 12 months seasoning to use the appraised value.
Okay, great. Do you have limits on acreage on your programs?
Ooh, that's a specific one. I want to say it's 10 acres.
Yeah, sorry.
That's okay. I want to say 10 acres, but we have who asked that question. If that's incorrect, we'll get back to you.
Yep. There's a lot of
so the questions are getting tougher as we go, Stephen?
Yeah, they are, and they're still popping in. So I'm trying to make sure, because yeah, some of these are very specific, and we're going to go ahead and we'll get those to the account executives for following up.
Yeah. So Stephen, let me clarify. You know who asked the question, right?
Yep.
Yeah. Okay. So I think what you just said is really important. If we probably haven't even been able to get to all the questions, and we probably need to start thinking about wrapping up the questions. So Any questions that we did not answer, as Stephen said, we'll get to your account executive and have him or her follow up with you.
Here's one on ICF. Can an investor use the purchase plus rehab cost?
Yes, they can, if it's documentable, and I mean, fully documentable. Yes.
This is kind of I know you touched on this, but maybe you could hit on the minimum FICOs on the bank statement and DCR loans.
Hit on the what?
The FICO score, minimum FICO scores.
Okay, sure. Yeah, bank statement minimum FICO is a 680 score. And just so everyone is aware, kind of historically, the average FICO on those loans that we've originated since we started this has been north of 720. So the majority of the loans are well into the 700s, but we'll go down to a 680. Investor cash flow will go down to a 700 FICO.
Great. What if a borrower owns multiple businesses? Can the statements be used for each business to qualify?
Yes, they could.
Okay. I'm going to run through these one more time, but so a lot of these are very, very specific. So
yeah.
One question we're getting a lot, and I think maybe you can explain the best way for them to find rates, because a lot of these questions are what the typical rates, what are the rates looking like? So how might a broker find a rate on a specific program?
Quick quote. That's the purpose of quick quote. And I put it back on the screen. You just put in your FICO, put in your LTV, property type, purchase full doc. Oh, it's not a jumbo loan. So you can see right there, the rate just pops up. So that's where you get the rates for your borrower is quick quote.
Great. So for the investor DSCR product, with multiple partners, do they all have to be on the loan if they want to close in an LLC?
Yes, all the principals of an LLC. You know what? Let me not. We might have some flexibility on that. Let's not. I don't want to be too specific. We absolutely have to have at minimum one. I'm not sure if the requirements for multiple owners of an LLC.
Looks like then, do all programs require an appraisal?
Yes. All programs require an appraisal. We have approved appraisal management companies on our website, and it's really easy and simple to go in and order an appraisal for them after the borrower has after we've disclosed to the borrower.
What is the term on the non-owner occupied, the DSCR program?
Well, this is what's great about it. It's actually, in fact, all of our loans, they're 30-year fixed. So they're fully amortized 30-year fixed loans. So that investor who wants it just to kind of get the loan and forget it, they've got tenants in there. The investor cash flow is perfect for that.
Great. Does Angel Oak have a foreign national program?
Not as of today, no.
Okay. I think that's about, they're still coming in, but like I said, a lot of these are pretty specific. And some of these are asking just if the presentation, yes, the presentation will be sent out, the recording will be sent out, I believe, tomorrow. And so you'll have a copy of this.
Yep.
Great. Do you offer short-term ARM loans?
We actually, we did, but the rates are the same on the ARMs as they are on a fixed. So no, as of today, they're all going to be 30-year fixed. But the advantage typically of going to a shorter term is a lower rate, but the rates are the same today. So 30-year fixed for all loans.
Do you need to close in an LLC?
Absolutely not.
I guess it's for the investor cash flow.
No, yeah, that's the ICF. No, you don't need to, but we can if someone would like to.
Great. I think that's it then.
Yeah, I
So
think we're good.
I still have a bunch of questions, and we'll get those to the account execs for follow-up.
Okay, yeah, that's great. All right, thanks a lot, Stephen. All right, so anyway, I just like to thank everybody for attending this. Hopefully, we gave you some clarity on the non-QM market, the products that Angel Oak is offering. I really just, very optimistic on where we're headed. These products and programs, a lot of the questions that maybe I had to say no to today, I expect in the very near future, we'll be able to continue to, not necessarily to the questions, but the box, the credit box, the non-QM space is going to continue to expand. So please stay in touch with us. We will stay in touch with you. Work with your account executive. Please utilize Quick Quote. It's there for you to give you very quick answers to our products before we make it an improvement to a program. It's in Quick Quote, so you don't even have to be looking for an announcement from us. Just always go to Quick Quote and you'll get the latest and greatest products and programs available. I'd like to thank you very much for your time. Very much appreciate it. If you wouldn't mind, as we hang up here, a quick survey is going to pop up. If you wouldn't mind answering a few questions, that would help us so that we can improve on this going forward. And I think that's about it. Everyone have a great day and a great June. We'll talk to you soon. Thank you.